Joining us right now is veteran energy analyst Arjun Murti. Is former, I should say, partner at Goldman Sachs. He made famously the call for oil between 150 and 200 back in 2008. Good morning to you. Help us understand what's going to happen now. What do you think?
You know, so the first part of that call worked okay when we got above 100, but the 150 to 200, we're now here 15 years later, and we'll see if we're headed back towards that environment. Look, we have very low spare capacity. Supply is struggling to grow right now. And of course, demand has recovered. A lot of people are using the super cycle moniker. And I actually think that's not quite the right descriptor. I've used the phrase super vol. It's more like the 1970s where geopolitics, the turmoil, it's going to create a very spiky environment, but one that goes in both directions. I think it's going to be a trickier environment to navigate here in the oil sector.
And therefore, how high do you think this goes at this point? Or do you think it's possible things turn around?
I think that's part of the point, right? So the 2000 cycle was characterized by China joining the WTO, demand exceeding what was limited supply at the time. I think this time around, you got geopolitics playing a much bigger role. Very hard to know how Russia plays out. They're a major oil exporter, 7 million barrels a day. That is not oil that anyone can make up on a short-term basis if for some reason it's disrupted. It's not disrupted right now. Who knows what happens in a war situation? On the other hand, if God willing, the situation there eases, that's the environment for prices pulling back. So that mindset of a super volatility environment where you go in both directions, quite frankly, is something that I think markets and people should be prepared for.
In terms of the transition to EV, Arjun, I'm curious if you're forecasting that the higher oil prices are going to be spiky and not consistent. Is that transition, is it hastened at all or not? Because we will see those prices ebb and flow.
I actually think the spiky environment is better for a transition to electric vehicles, actually. So it is that uncertainty of how high prices will go, how often will we see it, that keeps it in the news. It keeps reminding people. The work I did at Goldman Sachs 10, 15 years ago highlighted that you both need rate of change and an absolute level of prices to motivate, let's just call it fuel economy gains or EV gains. When you have an inherent uncertainty to the oil price or the gasoline price, it keeps it in the news flow. It keeps it on your news channels and others. And I think that motivates people to shift. I am personally an EV bull. I drive an EV, love driving an EV. These kind of transitions take, I think, longer than the market expects, but it is one that probably, it would be one of the silver linings, if you will, of a high price environment that you speed up that transition, but we're still talking many decades. I think the big issue with oil demand is that fuel economy is disappointed. And I think that would be the key to watch. Americans, consumers around the world continue to drive more SUVs. That eliminates the bulk of the fuel economy gains that many people who are more bearish on oil demand forecast. I think that would be the bigger question if we are in an environment where gasoline is above $4 a gallon, potentially well above it, even if it's for a short period of time. Do you start seeing a shift?
Arjun, in terms
of
a
more important near-term trend than EVs?